Welcome to Short View Trading. It's Monday, 26th of September. It's 9 a.m. London time. So what matters for markets? What matters if you're a swing trader looking to invest in equity index futures, S&P 500 or NASDAQ 100 futures on a 1 to 2 week basis? What's going to be the key factors that move markets over the next couple of weeks? That's what these videos are all about. That's what we're going to dig into. Well, it was another huge week in markets last week. In particular, US equities off meaningfully around 5 to 6% in most equity indices, as you can see in the chart in front of you now. The S&P 500 around 4% and change down, the NASDAQ similar, and then the likes of the Russell 2000 off even more, around 6.6%, and the SOX, the semiconductor index, off around 6%. But it wasn't just the US, it was similar in Europe. The price action in Europe was broadly similar, not quite as bad. Most equity indices on the week down around 4 to 5%, as you can see from the chart that we're putting up in front of you now. The standout performer in Europe was the FTSE 100, only down 3% likely reflecting that weakness we saw in the GB pound. Whilst elsewhere we had the dollar surging to a new high, as you can see on the chart in front of you now, up around 20% year to date. And with that, we had the GB pound, the sterling, pound sterling, moving dramatically on Friday when the UK Chancellor gave his mini budget. Pound down 3.25% on the day. Its worst move since Brexit and one of its worst moves over recent decades, as you can see in this chart that we've been putting up in front of you of daily pound moves against the dollar. But on top of that, it looks like we've got a right-wing coalition government coming into power in Italy. There have been elections over the weekend. It looks pretty clear they're going to be forming a coalition and governing. The S&P 500 is also back at its June lows overnight, having reached them on Friday. It's back there at the time of recording this video, and global equities have been making new lows in the last couple of days below what we saw in June. So new bear market lows in the global equity index, the S&P sitting on those bear market lows. So where does that leave us? What's the best way to trade this market going forward from here? And really the key question to consider is, are the lows in for this recent pullback? Have we got a local low in place or about to be in place in equity markets across the globe? Have we had blow off tops in the dollar and the 10-year bond yield? And is it time for a reversal and a bit of a risk on trade over the next handful of weeks as we see a classic bear market rally play out? So that's really the key question. Has the market sold off enough to put in a major local low? Well, certainly we've been short on and off for the last few weeks. For those that have been subscribing to the daily rag, the rag trader, we've been in and out of short positions trying to take advantage of this market to the downside. But as of this morning, we've closed that latest short position and gone flat. And the reason for that is we're getting pretty close to what we think will be a local low in this bear market and the beginning, therefore, of one of those major bear market relief rallies. The evidence for that is widespread and laid out in today's daily rag. One of the charts we highlight in there is the medium-term risk appetite scoring system, which we're putting up in front of you now, and which is back on buy at quite a punchy level. So yes, there may be a couple more days of downside, some choppiness here for a day or two or three, but it looks to us like the case for that bear market rally, that relief rally, is clearly brewing. So if you're interested in knowing more about our models and how we go about trading this market on a 1 to 2 week basis using equity index futures, S&P futures and NASDAQ 100 futures and so on, then please do click on the trial button below. Take a free trial to the Rag Trader. All we need is your name and email address, no credit card details required, and we'll send you the daily rag, the Rag Trader, for free for a bunch of trading sessions. Equally, if you like these videos, they're free content. They come out a couple of times a week. Simply click on the subscribe button and please click the like button as well and share on social media. So what are we watching this week? Well, there's a couple of key features in terms of macro data and some speeches as well from central bank governors. Key features on the macro side is a bunch of inflation data points out in the back end of this week. We get some first estimates in Germany, the Eurozone, in France in terms of inflation. And then on Friday, we've got US PCE, personal consumption and spending. And with that, of course, comes the PCE deflator, the inflation data point that the Fed is the most focused on. So that'll be closely watched as well. Elsewhere, quite a few confidence indices out of the US Conference Board and then also out of Germany in the middle of this week. So a couple of speeches on top, Lagarde, a bit of Powell and Mester. but plenty to focus on throughout the course of this week. So that's it from us. That's your morning market hit for Monday, 26th of September. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button or follow us on LinkedIn, Twitter, and or Facebook. So thank you for listening. Stay safe and trade well.